Well, I think as the probably four of us on this, it'd be quite interesting to just get people's background, whether they're employed, self-employed, have their own limited companies, because obviously the government have got several initiatives out there. So whether you're self-employed or run your own business. So am I right in thinking that most of you are running limited companies, or? Yeah.
Yeah.
Yeah, looks like most are limited. Right?
Okay. So I won't cover the self-employed scheme as such that's out there. Obviously, we've got James is obviously watching this, so you know all about the coronavirus interruption loan scheme.
Yeah, that's right.
Which I think you did a presentation on about a week ago, didn't you? So
yeah, I've done a couple for BizCom. Yeah.
So I mean, just to give a brief recap on that, that's basically a government-backed loan scheme, obviously to enable limited companies and other businesses to access funds during this pandemic. And there's a lot of press about the fact that you need personal guarantees and things like that. When I'm talking to the bank managers, their main concern is that people are putting a lot of applications in for the loan, but not supporting it with robust business plans and forecasts. You know, they're literally just sending an application form in, and that's basically holding things up. So what they are looking for, as one area director of a bank said to me, is we will lend, but we will consider your application as if the virus wasn't around. So we need to see what your business plan looks like. We need to see what your forecast is, etc. And then we'll come up with a judgment whether we'll lend to you on an affordability basis and things like that. So there's obviously a lot of press out there saying, well, you know, these loans aren't coming forward and the banks are lending. Yeah, they are lending. I mean, when I was speaking to HSBC last week, they'd already started pumping the money out. But to make sure that any application you put through, I would strongly recommend that you submit your forecasts with it at the same time. So I think that there's more pressure for the banks to keep on lending. So I think it will grow over the next weeks, but obviously cash is king at the moment. The other thing we've noticed at the moment is obviously people have got small offices and been paying business rates, but maybe getting small rates relief, are able to get the grants from the local council of up to £10,000. Now, looking across the country, and I've got clients all over the place, councils seem to have different processes for this. So, for example, in Milton Keynes, the money landed in people's bank account last week, whereas other councils, and particularly one sort of, you know, bordering the area, you actually have to make that online application yourself. So what I'm encouraging people to do is to be on the safe side, check the local council's website, gain their guidance, and if necessary, just put an application in anyway. What we are finding is that the money's flowed out where the councils have got people's bank details already. So they probably have made a refund to you of rates before. So if they haven't got the bank details, you'll be stuck in the system somewhere. So that will need some intervention by yourselves. And I've got one client in particular who is in correspondence with Milton Keynes Council, for example, and they want a copy of their lease for the offices just to prove that they are there, because obviously they've slipped through the net somewhere along the line on the council's records. So obviously £10,000 grant is a grant, it's not repayable, so it will help a lot of people through the difficult times. Obviously with limited companies, you have got the possibility of furloughing yourself and your staff, but what you've got to demonstrate with furlough is that you've had to cease trade or not doing any trade due to the virus. So what they have said is if we concentrate on director side of it, you can still do your director's duties, in other words, your statutory role, i.e. maintain your accounts, pay your bills and things like that. But you then talking to a customer, for example, to drum up some new business, or a supplier, etc., that's actually been classified as part of your trading side of the business. So that means that you won't be entitled to be furloughed if you're doing that sort of activity. Now, when we've spoken to contacts within the revenue, so firstly, you must keep furlough agreements for 5 years. So that indicates to me that they might be taking 5 years to carry out their checks after all this is over. But they'll also be looking for evidence to see whether you have ceased trade. And they have said that they will be looking at people's email accounts and things like that to see what email traffic has been happening during a period of furlough. So what you've got to be very careful is, if you are going to look to furlough yourself, we need to make sure that you generally are laid off as such. And the furlough system, the portal, is supposed to be up and live this coming Monday, the 20th. So how that's going to cope, I don't know. I expect nearly every business in the country will be logging on at some point on Monday morning, whether it can cope. But once those details in, the revenue is saying it will take about 6 days to process and get the money into your bank account. So what we're advising everyone who's in a position of furloughing anyone or themselves is to make sure that you have the details ready for Monday. In other words, make sure you have the employee's details, national insurance numbers, obviously the amount that needs to be paid under the furlough scheme, but also have your bank details to hand and everything like that. We haven't actually seen the portal itself to show what's actually required, but that's the indication of the notices coming out by the revenue at the moment. So those are sort of initiatives that the government's doing at the moment. Obviously, there are plenty of people out there who need the cash in their pocket at this precise moment. So what we're talking to clients about is trying to manage their customer and supplier relationships, and we always encourage communication rather than none at all. Always, if you're renting an office, for example, you need to be talking to your landlord. There are landlords out there who are giving deferments, I suppose is the word to say, on the rent, not necessarily giving holidays, but are prepared to defer it. And quite often, if they then defer it, it then gives them ammunition to go off to their lender, if they've got a mortgage, to say, we've got no income coming in for our tenants for 3 months, it's all been deferred, can we have another 3-month holiday ourselves? So certainly should be talking to landlords. I'd also be talking to your suppliers and getting sort of payment plans in place. We have several clients who've been totally honest with us and say, look, we need our accounts doing because we need to apply for the Corona loan, but we can't afford to pay you at the moment. So we're obviously having discussions with them and say, well, that's fine. Let's know when you're likely to be able to pay us, and let's come up with a sensible payment plan that's going to suit both parties. So that's the key sort of thing I think you need to be doing at the moment, is looking at those suppliers that you definitely need to be working with at the moment, but also doing an audit of everything that you're paying out at the moment, because you might be surprised the number of sort of direct debits or standing orders you've got going on. We all subscribe for things, and suddenly, there's another £25 coming out of the bank account every month for some subscription service that we don't use. Now's a great time to actually do a full audit on everything that you're spending on various bits and pieces, and having a colour if necessary. and yeah, just trying to keep that cash flowing. So has anyone got any specific questions they want to particularly raise at the moment, either about the government schemes or things they can do to help manage their cash flow? I mean, James, how are you finding with the coronavirus loan scheme?
It's clearly the figures aren't very encouraging to date. I think that the last published figures, there's been over 300,000 applicants and around about 4,000 loans have drawn down. Now, I think there is a big backlog, but certainly my my experience on the coalface, so to speak, I'm sure Matt will say the same, is that when you're talking to bank managers, they're very much treating this as a, well, to be fair, it's been different bank to bank, but Lloyds, for instance, are treating this as a bit of a last resort lend-wise.
Yes.
And just getting declines all over the place. Barclays seem to have a few more acceptances, but in all honesty, I don't think, and I'm sure again Matt will agree with this, I don't think banks are the answer to this. I really don't. I think the sooner the government can show a little bit of flexibility around the personal guarantee issue, and the sooner they can actually get some alternative lenders on board, we'll see money flood out of the system. But leaving anything to banks is always a little bit of a, I mean, there's plenty of banking experience in this room I can see, and I think we all know that banks move at about a mile an hour, and this was always going to be a slow burn. So I think the scheme is well founded. I think it's well meaning, but logistically at this moment in time, it's not really fit for purpose in my view.
Yeah, I concur with that, and I think I'll come back to my point. In order to help the application get through, is to give them as much information up front, up front, so they've got it there in front, so they don't put the application down and move on to the next one, and it helps them sort of rubber stamp it more quickly. But yeah, I mean, what other people, some bank managers are saying to me as well, actually, it might be easier for us just to increase someone's overdraft facility.
Well, that's what we're seeing. I mean, especially good customers who have got what we call shadow limits. So effectively, that means if they apply for a facility, they can get it. So the noise is the next door neighbour cutting a tree down, if you can hear that. Sorry.
No, that's all right.
A lot of customers have what we call shadow limits or facilities where effectively a click of the button and they can have the money. And I think a lot of banks are using those as a fob off if a customer rings up and wants money, rather than saying, well, go through the arduous process of a Corona business loan. You can have 40 grand on your overdraft. If I press a button, I'll get a form sent out to you electronically. I think it's a bit of a cop out because the clients are not getting sort of the protection of the Corona business loan scheme and the government guarantee. On the other hand, I fully understand why banks are doing it, because it eases their workload. So it's all about the systems and the structure rather than the actual product itself.
Yeah. But I think we've also got
to follow up with James. They're all applying a different methodology to calculating what people can afford. So Barclays are saying it's 2 times debt service cover. Lloyds are at 1 3/4. They're all over the place. There's no consistency at all.
But that's because the government have given guidelines to the banks, haven't they? And the banks are applying this. I mean, it's their money at the end of the day, and I think some people don't understand that. All the government are doing is giving a guarantee to the banks.
But you've got some banks are saying, so they'll go on 2019's numbers. Lloyds are saying that's the eligibility, and they're saying they're looking at viability across 2 years. Now, you're not necessarily going to have every business is going to be viable over 2 years. So there's loads being kicked out, and especially with I think, Roger, as you said, the lack of cash flow information, a good forecast is we're finding we're turning around declines using that process.
Well, that's the reason us guys get involved, isn't it? Us guys get involved to help turn declines into accepts.
I think the misconception is that the loan is just available to any company that needs it, and it's obviously going through the process because the banks are saying, actually, we're only going to lend it to a good business, and what they say is a good business in 2019 is going to be a good business in 2021. Yeah. It's just I'm going through a shit 2020. So that's where the misconception is, and I've got first hand with RBS because my wife's still there and she's on the front line of it all. And the problem as well is there's a lot of legitimate applications coming through, but there's a lot of crap coming through in terms of people wanting C-bill loans because they're out of work, so they want to decorate the house and stuff like that at all. And you think, this is taking up a load of time of the RMs who are sort of like struggling to sort of keep up to speed with all these inquiries, and you're getting some idiots that sort of like want to sort of like play the game on it all. So
yeah.
Frustrating, isn't it? I think you're right. I think businesses aren't appreciating this. This is a normal application loan like anything else. It's just a government-backed one, essentially, isn't it?
Yeah, I mean, RBS have gone through the process of they're not taking any sort of additional security on these C-bill loans. But I spent 35 years at the bank, and normally it takes about 35 years for them to develop a new product, and they're having to do a new they're doing a new product literally in a space of 2 weeks, aren't they? So, this is alien to the banks to sort of like go from a nil base to a brand new product in this in a space of 2 weeks. So there's always going to be problems coming out.
It's a complete turnaround in the underwriting mentality of the banks, and this is something I've badged on about since this was released. I mean, underwriters of banks, as most of us know, are the funeral directors. If they weren't underwriters, they're not the most positive of people half the time, and yet we're asking them now to underwrite loans for £250,000 of no personal guarantees. It's you underestimate, well, you guys don't, but a lot of people underestimate the mentality change that these guys are having to go through. And we've got to spin it on a sixpence. And it was always going to take time, because as Nick says, getting the banks to do anything is difficult. Getting to do something like this is virtually impossible in the timescales that have been promised.
James, you were talking on a previous webinar that you did for me about the possibility of organisations like the Funding Circle being an outlet for this type of loan. Has there been any movement on that? Because you felt that would be a more flexible approach or an easier at this point.
The benefit of people like the Funding Circle and other similar lenders, I use them as an example because they're the best known peer-to-peer lender, is they have the platform to be able to turn these things around quite quickly. And their due diligence is lighter touch than a bank because of the way they're funded. They're not a bank. They don't have the same regulation. So, for instance, if a guy like me or Matt were doing an application for the Funding Circle, the information we need is probably 50%, maybe less, of what a bank would require. The application takes us, not that long to actually put together, and the decisions made are quite quick. So, because it's obviously the decisions are made based on algorithms and serviceability calculations, and a lot of it's done by computer, it can be a lot more straightforward, and you don't have to have customer meetings with the bank or anything like that, which you do normally. So it was always going to be a struggle to get that platform aligned to the C-bill scheme. But it seems to me, I personally feel it's the only way that this money is going to get out there. But the likes of the Funding Circle and other similar lenders, their risk model requires them to have a personal guarantee from the directors. And while they were applying initially for this scheme, that requirement was still in place. You could still take a personal guarantee as a lender. As soon as the Chancellor abolished that, but loans under £250,000, effectively that cut off Funding Circle, Esmail, Walker, all at the knees, because their risk model requires a personal guarantee to be in place. So they've all been dead in the water, really. So there's a lot of lobbying going on through guys like our trade body, etc., to try and sort of explain the situation to the Treasury and say, alternative lenders, new lenders need to be added onto the panel, because otherwise you're relying solely on the banks. And there are a few other lenders involved, of course, but the banks, I think, are about 90% of the applicants so far. And they don't have the manpower or the infrastructure to actually accommodate the amount of applications that are being put to them. Well, guys, like us brokers in the marketplace, we deal with this all the time. We can turn these applications around quickly. We can help the backflow. We can tell people if they're eligible or not without having to go through the whole process, and it'll just speed things up. So, as far as I'm aware, unless something's happened overnight, there's been no real progress on the likes of the Funding Circle of ESME being added onto the panel. But we live in hope that will happen.
I'm not sure they'll come on because the rate requirements, you see Newable drop off because they said when they couldn't charge their sort of, let's say 7 or 8% they wanted to charge, and had to be lower and more reasonable. So I'm not so sure you'll get a Funding Circle, albeit I agree with you, if it comes on board it'd be great for us.
I think the guarantee thing's the issue, because ultimately if the guarantee's in place, they can be considered for the scheme. The rates thing, yeah, absolutely. I mean, funding circle rates go from anywhere from 5% to 25%. But for a business to survive, they either they take the money or they don't take the money, don't they? It's up to them.
So, I mean, obviously, getting cash in from various banks, I think we discussed quite a bit. Can be a bit troublesome and tiresome. So, what a lot of businesses are trying to do at the moment is to sort of think out the box a bit more to see how they can get some cash in by other means, which could mean changing their business model. And I think we've all been discussing a bit earlier, the fact that we might use Zoom a bit more to be able to talk to our clients and things like that. But if we turn to sort of other businesses, like, for example, there's a garden nursery up the road, it shut its doors, but it's got a whole greenhouse full of plants to sell. So it's now doing online orders. The only trouble with it is it never had its online website there ready to take orders and payments and things like that. So they've had to adapt quickly. And now they're taking email orders, etc., and taking the plants out and delivering them, which is fine when you've got a whole load of stock there. But what I would encourage people to do is that if you've got this new way of doing things, actually now you need to look at all your costs again and remodel what your prices are. Because if you think about the garden nursery taking, 2 pansy plants and delivering them to me, it's probably going to cost them a tenner in labour and fuel, etc., to deliver it to them. So are they actually making a profit? They may want to do it at the moment just to get rid of stock and things that are sitting in the nursery, etc., just so that they recoup some of their costs. But I think going forward, with a lot of businesses who are coming up with new ideas and new products, they've actually got to take some time out to actually look at their profit levels on this, because there's no point in rushing around doing all these things if you aren't going to make a profit. So while we have got this lockdown and perhaps some of us are a bit quieter than normal, what I would do is encourage people actually to sit back and look at their cost modelling on it. Because obviously, we're all in business to make money at the end of the day, or most of us are. So, obviously at this time it's great to be doing all these additional things, but we've got to bring the cash in. But once we get over this, it's great that we've got all these new business ideas and initiatives, but we've got to actually go back to some of the basics. So I've been encouraging people to do that during this lockdown period as well. So yeah, I think at the moment it's just trying to hang on to that cash and communicating with all your suppliers and customers, making sure that all your initiatives, etc., are profit making, etc. So has anyone got any other questions they'd like to ask? Paul, has
anybody got any for Roger, or any other comments?
Can I just clarify on the local council grants? That's just sector specific, isn't it? It's not for everybody on the sort of like below 50 grand rateable value. It's just you've got to be in a certain sectors, haven't you?
No, not necessarily. It's under 15 grand is the rateable value. So I've got clients where ranging from marketing to a one-person solicitor to a marketing agency. Well, I think where you're getting confused there's a bigger grant for the hospitality sector,
right?
Which is the 25 grand grant. But no, every small business who has who's paying rates on property that's rated at a value of less than 15,000, which means they get small rates relief,
right,
will get the grant. So you may not actually pay any rates at all. I've had some clients that don't pay rates because they get small rates relief, but suddenly they've got 10 grand in their bank.
Okay, so it's interesting. I've missed that bit. I knew about the 25 grand one, but missed about the 15. So.
Yeah, so it's a 10 grand grant if your rateable value is less than 15,000. And you can go online to the valuation office and type in your postcode and select your address, and it will tell you what your rateable value is.
Okay.
So we've done that obviously for a few clients. But as I say, some councils, they all have their different methods of dealing with the applications. Originally, the government said, you know, councils will contact you, and that's certainly what Milton Keynes Council did. But then several other councils we've had down in the southwest, where it's definitely an application type process. So
I suppose just looking at it from our side of it, the insolvency side of things, I mean, I think our concern more so is not so much the here and now, but probably sort of like 6, 8, 12 months down the line, when all these loans and deferments of VAT and everything like that become payable. Because obviously I think there's a lot of people going to be in the situation where they're thinking, oh yeah, well, I haven't got to pay my 20 or 30 grand VAT bill, but then suddenly they've got to pay 60 grand in a quarter and haven't really accounted for that. And I think that's going to cause a lot of people a lot of grief, because I think there's again just a misconception that they almost think that, well, I'm not having to pay, but they have got to pay. Yeah. But so I think there's going to be a bigger problem more so towards the back end of the year, or especially into 2021, rather than there is probably now at the moment. It feels bad now. So.
Yeah, I think because obviously the VAT deferment, you've got to pay by the 31st of March 21. So there's going to be a crux point in. Particularly in the new year, when people have, you know, got to pay their tax bills and they've got to pay their VAT. I think you're quite right. It's interesting, a lot of people think they don't actually have to submit their VAT returns, but you still do. And if you don't, you'll get penalties on it, etc. like that. So, everyone needs to keep on top of their compliance work. But yeah, it's a very valid point. I think, we're just kicking the can along the road a bit, aren't we? And especially if you get mortgage holiday for 3 months, you know, the capital sum's still there, accruing interest.
Well, no, the RBS bill loans are 12 months capital and interest holiday. So effectively, you know, you've got nothing to pay back for 12 months. So in that respect, it's quite easy to take, whatever it is, 100 grand, 200 grand, and then not realise that in 12 months' time, you've got to start paying the blooming thing back again. So, and
the debt doesn't go away, does it?
No, that's the problem. The debt doesn't go away.
As well, I mean, you know, if you're looking to borrow a couple of $100 grand, a loan like that you might normally put over 7, 10, 15 years, depending. But now the maximum term is 5 years. You know, a couple of $100 grand over 5 years is a chunky old repayment, even at a low interest rate, to be honest.
Yeah, well, it's almost 4 years effectively, because you're not paying anything for that for 12 months, are you?
It's 6 years, with 1 year for that.
Oh, it's 6, yeah. Sorry,
It's still chunky.
Yeah.
Anything else, gents?